especially if you already made some money already. So, um, and then finally, the stuff we can do like a little small beginner situation. Um, and I'm gonna switch over to another chart. Let me go to this chart. Okay. Actually, not this one. Window. Top step. Trading view. Okay. All right. So there are there's really 6 contracts for each of the indices, right? There is the continuing contract that has a continuing contract version of 1 and 2, right? And when you look those up, I always recommend you guys trade the micro, and then there's the mini, right? The micro and the mini. The difference between the two, the mini has a larger contract size than the micro, right? The micro has it depends on what you're trading. If you're trading NQ, NAS, or Dow, they have different contract sizes, but the value of the contract is different based on the different asset, right? But in our case, right now we're looking at the ES chart. The ES is the ES symbol for the mini is ES, and then underneath that futures contract, you have the continuous, which is the ES1, ES2. Both of these are continuous contract. Those you don't actually trade them, but they have continuous data so that you can see the data for the futures ongoing, right? The different contracts for each quarter are the March, June, September, and December. And that's for every year, right? And right before each one of these is when the expiration date. The expiration date for the current contract that we're in is March. I don't know the exact date in March, but if we go to the chart, you will see it that it'll expire at a date in March. Same thing in June, same thing September, same thing December. You'll also notice that each contract has a different letter value. H for the March, M for the June, U for September, and Z for December. And that repeats itself. So that's how you know. That's another way you'll know like which contract you're trading in, right? And this is the mini contract. You see this E-mini S&P 500 futures, right? If you want to look at the same thing for the micro, you just add an M in front of it. And that gives you the micro M, the continuous contract. Again, it's MES, 1 apostrophe, exclamation point. MES2 exclamation point. And a lot of times what I used to do is I would always mark up the continuing contract just so I have something that I don't have to keep marking up um different uh sorry. Just so I don't have to keep marking up the different contracts as they change over. I would just mark up the continuous contract and I would always use the continuing contract one. But I stopped doing that and I started just when I switch over to the next contract, I just go ahead and mark that one up too because I can always go back and look at that. And then I just want to make sure that I'm trading with the correct numbers because the numbers from the continuous contract and the current contract are different, right? So again, just like in our mini contracts, which is listed as ES, our micro E-mini S&P 500 futures has the same thing, a March, June, September, and December. Same same variable H, M, U, and Z for the contract listing, right? On your charts, you'll see this little symbol at the bottom. This will tell you exactly when the contract expired, right? So this is an old contract, right? This expired um Friday, September the 19th of 2025. This isn't the current contract. So what we would need to do, we want to see the current contract, go to MES, add in the current contract. We in the March contract. And I'll do the same thing for the rest of these. Go ahead, pick the wrong way. It should be H. So now all of these are listed under the current contract, right? So, okay, we got the ES current contract, right? If I was looking for Dow Jones or NASDAQ, they have the NASDAQ is listed as NQ. So NQ gives you the E-mini NASDAQ 100 futures, right? And it's the same thing. You have a two continuous, and then you have your quarterly expiration contracts, right? If you want the mini, same thing. You add M in front, and you got if you want the micro, it's the same thing. You add M in front. So instead of it being NQ, you add MNQ. And one of the things you need to notice that, right? So let's just do a paper trade, right? And during the paper trade, right? If I do sell, right? I didn't mean to sell it. Let me open up. Let me open up this way. If you ever question, like, what's the contract size? What's the value, right? So we're trading every tick, right? So every 0.25 is a tick, right? And for every 0.25 up or down, all right, Anna, every 0.25 up or down, you're gonna gain or lose $1.25. And that's because we're trading the micro ES contract. if we go to the mini, which means we just remove the imp in front, and we go look at the same thing, that number, that $1.25 is multiplied by 10. So you are now going to gain or lose $12.50 every tick. Every tick is 0.25. So every time price goes up 0.25 on this, and you can look at this, right. The current price is 69.3275.75. If this goes to up 0.25, that means we're at 69.33. That means you would have gained $12.50 on this. Make sense?
Yep, make perfect sense.
Okay. So what I always trade is I'm trading one of these three. I'm trading S&P micro or mini. I'm trading NASDAQ micro or mini. I'm trading Dow Jones micro or mini. And then gold has its own as well. Gold is also gold differs because gold contracts expire. And the one thing I forgot to mention is that Dow Jones, NASDAQ, and S&P 500, their contract expirations usually are the same, right? So whatever day that Dow expires, S&P expires, and it expires the same. Gold futures contracts, they expire on different days. So you look at gold, gold is GC, right? So to trade gold futures, the micros, which is the larger contract, which is the larger contract. The micro is the smaller contract. The mini is the I said this backwards. The mini is the larger contract, and the micro is the smallest contract, right? So gold has the micro and the mini, right? So same way, we got the continuous contract on gold, GC1 exclamation and GC2 exclamation. Then we have the January contract, February, March, April, May, June, all the different contracts, right? For the rest of the year. The gold contracts work a little different, right? Same thing for the micro. You just add the M in front, now you get the contract listing for those. When you're looking at that, you got the micros, you got the continuous, continuous micro gold futures for up here at the top, and then you have the contracts for the rest of the year. And that's what you're going to be trading for gold, S&P, NAS, Dow Jones, right? Okay. So every time I'm on the chart, this is what I'm looking at. Looking at one of these guys, one of these, and this one I'm trading, one of these. So we in the February contract on gold, and the same thing we looked at before. If we on the micro, every tick, that means that right now price is sitting around right now on gold, price sitting at 47.92.5, right? So if it go to 6, that's a dollar gain. 0.6, it goes to a dollar gain up and down. So that's how you gain money on this. If we go to the mini, it would be $10 a tick. Make sense? I see your hand up, Cars.
Yeah, I wanted to ask you something. So, what's the significance of trading the contract within the time frame? That's what I'm trying to understand. So, if it's a quarterly contract and
Mhm.
you make your trades within that contract when the contract expires. So, I'm trying to understand.
Technically, if you don't exit the contract, you take ownership of the asset, and you have to have the amount, the value to own the asset. Typically, they don't do that anymore too much. They'll just liquidate your position now. But back in the day, that's what they would do. They would make you fork over the money to own that asset, whatever it is. But now they typically just liquidate your position and close it out if you
Okay.
don't meet the expiration date. So the recommendation is just you typically not gonna be in that. Once you see you getting close to the contract expiration, you want to be out of that position because the closer you get to the expiration, the harder it is to close out that position. So, like if you're in a buy, you're not gonna find a lot of buyers that's willing to buy that contract off of you because it's about to expire. So, I mean, you won't find anybody that's willing to take that contract because it's no value. The value of it is expired at this point. You see what I'm saying?
Yeah, I see what you're saying. Um, so we can't trade on a continuous chart. That's just for data, right?
Yeah, yeah,
Okay. So we have to trade within the contract.
yeah,
Okay. And it's okay.
yeah.
So the best thing to do is get in at the beginning of the contract and try to close all your positions out before the contract expires. What time frame you looking at to close a position out
If
for
you
the
a swing
contract?
trader,
If you're a
if you
swing
that
trader.
kind of trader, if you that kind of trader, then that's what you would want to do.
Okay.
But if you're not that kind of trader and you're a day trader, like or a scalper, that means you just closing out in and out of the trade during the
Oh
day.
yeah, that's right. Okay.
You
And
don't even need to worry about the expiration. You don't need to worry about the expiration until it gets close to that day, and you need to go ahead and switch. And usually your broker will go ahead and switch you over automatically anyway, because the broker switches over on his own at a certain point.
and everybody else they just caught within the switch.
I guess so. I guess you
Okay,
can
well,
look at it like that.
put it like that.
Yeah.
Okay. So basically it's like options trading.
No.
Basically. It's not. Okay.
No, no, it's not. I mean, I take that back. It is similar because there are expiration dates and options, but how you trade them, what you look
Yeah,
for is different things to
okay.
consider. And the
Okay.
size of the contracts are different. Every time you buy one option, you buying 100 contracts of something.
Okay. Okay. Yeah, that part I understand. I understand, but I'm just trying to understand what these contracts mean because when I try to I'm still in the paper trading. Sometimes it won't allow me to trade on a certain symbol, and that's what I was trying to understand. I'm like, maybe I'm doing something wrong, or I'm getting confused, and I'll just go to another symbol of that same trade, and then I can trade on that symbol. But I'm not paying attention to what symbol it actually is. So I just go
Well,
to ES1 and
no,
just, what I'm saying. So that's what I was trying to understand. Now
no.
I have been trading on specific contracts like gold 2026 within the first quarter trades, and I've been able to trade like that. That's what I was trying to understand. I'm like, I'm confused. I see my markup. I mark my chart up. I'm hitting my targets, but they're not letting me trade on this symbol. So now I understand. Okay.
Yeah. Yeah, make sure you're in the right contract.
All right. Got it. Appreciate that.
Mm-hmm.
Corey, I have a question. It's kind of a sidebar. You're for your challenges, you're using Tradeovate and Apex?
I'll show you. Um, so I'm using, let me I'll open it up. I don't want to record this part, so I'm
That's
gonna go ahead
okay.
and stop
Okay.
the recording on this.
Okay.
Then actually let me share my screen again. Let's look at screen desktop 2. So I have two different I have Apex and I have trading Top Step, right? But the main accounts I'm trading right now are on my my Tradeovate accounts, and then all of them are through Apex and Top Step, right? And so on Apex, you can have three different kind of accounts. You can have a Tradeovate account, a Wealth Chart account, and a Rhythmic account, right? And I have I have uh 5 accounts that are I have 6 accounts that are Tradeovate, and then I have 6 accounts that are Wealth Charts, and then I have 2 accounts that are on Top Step platform, right? And then when you log in from TradingView, right?
Mm-hmm.
I can see all of my different accounts, right? These are all of my Tradeovate accounts. I got 6 accounts on here. 5 of them are in a combined state, right? That's the ones that just say Apex. Then the one that say PA, that means I finished the combine and now I'm working on getting payouts out of this account, right? So this account, I think in my I'm only trading 2 of my Tradeovate accounts because I don't like the Tradeovate platform and I can't copy my trades inside of TradingView when I trade them. So I have to trade these individually.
That
So
was
all
my
right.
next question. If you had a preference in who you used.
Yeah, so I'm still working through that a little bit. So right now, these accounts, my Tradeovate on this one on 5, this one is I'm just doing anything in this account. I'm using this as my I don't give a damn account. And this one's too. This one's a 300,000 account. But the other accounts that I'm using wealth charts for those, right?
I don't think I even heard of that before. Okay.
It's only through Apex.
Okay.
Wealth charts, this one is a different platform, right? And this one I can't use TradingView with, but their platform is decent enough, right? I can do enough with their platform to get what I need to go do, right?
Okay.
And so in this one, all of these are in combine state, but I'm almost done with these, right? So these are over here, and these are all $300,000 accounts, all 6 of these, right?
Mm-hmm.
Same situation, but I can actually copy these, right? So I can copy right now. My copy is let me go to
And this is wealth charts, and you can copy your trades on wealth charts.
yeah. So right now the parent is 12, and then everything I put into 12, I copy into 13, 15, 16, 17, and 18.
Okay.
So if I put one trade in, it's all getting copied in there.
Okay.
And then it can tell you all of my balances, right? I got to make 20,000 in each one of these. And I'm almost done with these two. I still got 13. I'm up 13, 13, 11, 16, 16, almost 17 on these two and 13. And then I'll be able to get payouts after I get up 7,000 again
And
on
these are
the
funded accounts that you're
funded
showing?
account. Yep.
Okay.
That's why I keep telling y'all, like, don't worry about making no money right now. Just figure out the craft, because after I get all these accounts done, that's the money just gonna come in anyway after that, right? So just worry about like how to get the skill. Don't really be concerned with like, oh, I need to be trading right now, I need to do this. Just get as comfortable as you can with the concepts that I'm showing y'all, and then you can worry about making the money after that. And you don't even have to touch your own money. All you gotta do is just buy one of these funded accounts. Like, a lot of people spend a lot of time losing their own money when you don't even have to no more. You don't even have to, like, for a $300,000 account with Top Step or Apex or any other, you're gonna spend around $100 and some a month. And that's if you don't catch a sale. If you catch a sale, like I did, I bought like 12. How many accounts I got? I got 16 different accounts. And I'm paying every month, but it'll take me one payout to get the money back that I spent on this, versus putting $5,000 or $10,000 in my own account and trying to make the same amount I would make off of these accounts. When think about this math, right? If I put $10,000 of my own money in an account and I trade it like I'm supposed to, right? That means that one, I need to risk no more than 1% on the trade, right? That means that I don't need to risk more than $100 on a $10,000 account, right? And at the most, overall, I don't need to be losing more than 10%, which is $1,000, right? Right. So if I'm trading every day, let's say I'm trading every day and I do $100 a day, right? In this $10,000 account, and I trade every day, even with me winning at 100% win rate, right? That's $500 a week, right? $500 a week. That means the most I can make in a month is $2,000 off of this account on a $10,000 account. Y'all following the math, right?
Mm-hmm.
Yeah.
Okay.
Mm-hmm.
Okay. Now take that same mindset, right? And think about this, right? If I get a $300,000 account, right? And I finish the program, I finish everything, right? 1% of that is $3,000, right? And if I lose, a max at this is $30,000. That's 10% of $300,000, right? Let's say I do the minimum $3,000 a day, right? For 5 days a week, 15K, right? I do that every week, and I'm talking about at 100% win rate, 15K, and I'm doing 15K a week on this same account, and I'm doing 15K every week, right? And I get to take home 90% of that, right? So I get to take home 60K minus the 10% that they take, right? Off of this one account. And this is just best of the best, right? They taking 10% off of this, and all I'm doing is I'm taking home out of that 60K, I'm taking home $54,000 in a month. So why would I use my own $10,000 to do something that I could do, take the same amount of effort that I'm doing to make $500 a day when I could be making $3,000 a day and bring in a payout from a 300K account that's 10 times, 100 and sometimes more than I would make with my own money. You know what I'm saying?
And
That
that's
math
without
real
you
math,
copying
man.
the trade.
And then wait, hold on, before y'all even say something. That's with one account. Now, if I'm copy trading all of these in multiple accounts, you take that same number that I just gave you and you multiply it by 1, then you multiply it by 2, then you multiply it by 3, then you multiply it by 4. I just told y'all I got 14 accounts. Do the math on that. So the same effort I'm doing for one account, that I'm the same exact effort that I'm using to make $500 a day, I'm about to put into 20 different accounts and do the same 1% every day in those accounts. You
And
see what
that's
I'm
less
saying?
risk.
You see what I'm saying now?
So, and then all you doing, you basically just one click trading, right? You
Yeah.
copying, the
Let me
trade. Oh my God, man.
let me show y'all something.
That's that number is exponentially big, but
Let me show y'all something. That's why y'all think that's why I be so serious about this shit. Like it's just like, cause I know the numbers. I know what I've seen this before. I've done this before. I've had payouts before. But right now, you can have more accounts than you used to be able to do, right? Like at one point, you could only have like one payout, but now it's multiple companies, it's multiple reputable companies, and then you got companies like Apex. Apex will give you 20 accounts. Top Step will give you 5 accounts. And then it's another one. You can go to FTMO again and stuff like that.
Wow,
So
I haven't heard that name in a long time.
they back in the US now. They back in the US. They back in the US. What you got, Kelly?
Got a couple questions. And I'm gonna just say all three, and you can answer them all three or tell me to stop. So, how long? For one, how long are you in your trades? You're day trading? You're not scalping?
I do both. I scalp into day trades.
Okay.
And I am like a really like versatile trader, right? I can day trade, scalp, swing trade. I can invest, long position, short. I know how to do everything.
Okay. And then, so when you like, what is the test, or what do you have to do to get these funded accounts? Like, how do you show them that you know what you're doing so that
There's
they'll fund these accounts for you?
there's 2 phases of the funding stage, right? There is the combine stage, and then there is the I don't even think I don't think they call it a second phase, but you might as well call it a second phase, right? The You have to make a certain amount of money based off of your account size, right? So my account is a $300,000 account, and then I got $150,000 account, right? And I got a $100,000 account, right? In the $100,000 account, they require you to make $6,000, and you can do that over time, and you take however long as you take, right? But you got to make $6,000, right? Then after you make the $6,000, you got to give yourself a buffer, and you have to trade a minimum of 5 days in profit to make the buffer, right? So that looks like the buffer has to be in the $100,000 account. It has to be 3,000. So after you make the $6,000, they're going to give you a new account, and then you got to make $3,000 in that account as your buffer, and then everything you make after that, that's your money. And
but
everything,
that I'm sorry, that buffer has to be within that 5-day time frame.
yeah. And it don't have to be 5 consecutive days. It just needs to be 5 profitable days.
Oh, 5 days of positive training. I
Yeah,
mean
5
trading.
days of positive trading, right?
Okay, all right.
And
It's
you
the
have to
same.
do this for every funded account, or is it like, okay, you did
Everyone.
it one time?
Yeah,
Okay.
every one of
Okay.
them. Yeah. So if you open up a new account, you got to repeat it all over again, right?
Okay.
And then if you fail the account, and a lot, that's what people get, how they get mixed up, right? There's two ways you can handle it, right? You either pay to reset it immediately, or it's automatically going to bill you the next month, and you let
Okay.
it reset on the next month. That's the two ways you handle that.
So if
So
you let it reset on the next month, what exactly does that mean?
you're not trading it until it reset again.
Until it reset. Oh, okay. So the count on hold, basically.
Yeah, yeah.
Okay.
And when you reset, that means like you pay your little fee every month to go through the challenge, right? Go
Mhm.
through it. And you're gonna pay that fee until you finish the goal, right? Until you, if you're in $100,000 account, you're gonna pay whatever that fee is per month until you finish the $6,000. Once you finish the $6,000, you pay an activation fee. The activation fee is based off of your account size. And it's usually around $150 if you don't get a sale. If you get a sale, it'll be, I've seen it as low as $40. Like, so you pay that one time, and then after that, you're in the funded account, right? You get your buffer, and then you get your payouts after that. After you get your buffer, you get your 5 days of positive trading. Anything you make after that, you get to take home 90% of whatever that is.
Oh
You
yeah.
get, you get to request payout.
That's
If
what's up.
you're in a 150K account, you need to make $9,000 instead of $6,000, and you have to make a $5,500 buffer. Anything after that, that's yours. If you're in a $300,000 account, you have to make $20,000. Then you need to make $7,500 as your buffer, and then anything after that is 90% profit of yours. After you make 5 positive days, you get to request payouts.
Okay.
You can
I got a
have,
couple of questions. Carlo.
hold on,
All right.
Kelly, you
Okay.
had one more?
Yeah, it was one
Uh,
more.
yeah.
So, with all that being said, and what you was just showing us earlier, I'm guessing that your strategy that you like to mainly rely on is the fair value gap, like trading in the fair value gap, or is there another one or something that you just know just off of experience? So, like with these images that you post in the group, what do we do with this on a weekly basis?
The images that I'm posting are the setups that I'm looking for that whole week. Or like I'll get, usually on my calls, I give you what I expect to happen within the week, right? Those setups and these lines and stuff on the charts are what my projections are as to where I think the market is going. And if you know what I'm looking for and you've been on my calls for a while, you can take what I'm showing you on the charts and then get your setups based off of those as well. So those are just my way to help you guys navigate what to expect, right? If me, what I'm what's called a smart money trader, right? I look at fair value gaps, I look at order blocks, I look at what's called liquidity, I look at what's called PD arrays. And all of the PD arrays are order blocks, fair value gaps, all that kind of stuff. Those are like the main points of my strategy. I also look at the VIX, right? I look at correlation and inverse correlation, which means that if they correlate, that means they should move together. If they inverse correlate, that means they move opposite. Dollar and gold, they inverse correlate. VIX and the indices, they inverse correlate. The indices, they all correlate. They should go in the same direction. And what I look for on the charts is I look for where I think I'm going to see a low or a high in conjunction with what I'm expecting to see on the VIX, what I'm expecting to see on the other indices, and then I take my setups based off of that.
Okay.
There's a lot more to it than that, but overall, if I had to break it down into a smaller scale, that's kind of what I would look for, and that's kind of how I trade and what I look for. The other things that I look for too is some things on the chart, but if I had to be totally like break it down to the simplest terms, those are the things that I look for.
Okay.
I do I look for some basic things to get my direction, right? So when I'm trying to figure out like what direction I think the market is going to go, I look at the previous day high, previous day low, right? And if when I'm looking at that, this is where I always start, right? I want to know where the high and the low were, right? The high from yesterday was right here. The low from yesterday was right here. In its simplest form, though, this is the first question I'm always asking. Where was my high from yesterday? Where was my low? And then the next question I'm asking myself is, based on probability, which one am I likely to take out next? Based off of where current price is, right? So if I gave you the simplest strategy in the world I could give you is this one right here. If I'm bullish and we close the day near the high from yesterday, where should I take out next? Simple question.
The high from yesterday.
The high from yesterday, right? That's a strategy alone, right? I don't have to go no further, no other explanation than that. That's all. That's a strategy in itself, right? Okay, so if you understand, like I'm looking at this high from yesterday, price right here already 69.39. The high is 69.45. So I could just say, hey, I could buy right here with the expectation that we'll take out the high from yesterday. Because I know that because of how high we are, we shouldn't come down to 68.14 at all, right?
Mm-hmm.
So after I establish that, my next thought is find my PD arrays. That's my fair value gap. That's my order block. That is my inverted fair value gap. That is my opening price, opening day gap. There's a lot of those things to consider. A lot of PD arrays, right? Looking directly on this chart right now, even though my expectation is for us to take out this high, right? Price don't just move like that, right? A lot of times your price has to make a wick, right? So if this is yesterday's candle down here in this bottom corner right here. This is blue candle, right? The low of the day is right here. The high of the day is right here. So a lot of times you'll see that before we take out a high or low, price needs to trade down into the previous day, right? And in between this candle, the daily candle down here that I'm looking at, there's going to be levels inside of the day that price is probably going to come down into before it does its thing to the upside. That's where those fair value gaps, those order blocks come in. So an order block is a series or a single down candle, right? So this red series of candles right here, that's an order block. All of these candles right here is one order block. Just like all of these candles down here is one order block. And the ones that I want to pay attention to are the ones that have taken out a low, right? If you've taken out a low, that's the order block that I want to pay attention to. Only those ones, right? because you can see order blocks all the time, right? This candle right here, these two, that's an order block. But it's not one I want to pay attention to, because you see the low right here that it made, it didn't take out a low. I don't care about that one. But you see this one right here, it took out this low, it took out this low, and it took out this low. And when it did that, it left this low right here, and it pushed up. The next thing I would look for is a fair value gap. A fair value gap is a 3 candle pattern, right? It's a 3 candle pattern. It's a candle that has a high, a wick right here, a engulfing candle next, and then another candle that leaves a wick inside of the body. It's always these 3 candles. Let me draw it out just to make sure you see what I'm saying. Where's the little thing?
So would you say it's always 2 candles and a pullback or a retracement?
It's pretty much this. This is always this combination right here. It's always these 3 oaks. It's always gonna look like this. These 3 candles right here.
Mm-hmm.
Always. Sometimes you'll see, I'll show you some different variations too, but you always want to look for these 3 candles where you see a candle, a small candle with the wick, an engulfing candle, and then a smaller candle that closes in the low of the wick close inside the body of the previous candle.
But they never meet.
But they
The
never
wicks
meet.
never meet. Yep.
That they never meet. What this represents is price imbalance to the upside. That means that there were too many orders in one direction without there being enough orders to have the back and forth between, right? So not to go too deep, but I'm not going to talk about that part, but I don't want to go too deep, but just remember this pattern. And in particular, you want to see this same pattern with the order block, and the order block get traded through by a fair value gap. That's the main thing, right? So you want to see liquidity. That's what liquidity is. Every time you see these lows, these represent liquidity.
Mm-hmm.
These are liquidity. That's what I'm talking about. These lows, right? You want to see this liquidity get taken out by order block, a series of down candles in one direction, and then these series of down candles, right? They need to take out a low, right? And more so in particular, you want to see inside of the order block, you also want to see a fair value gap in the opposite direction, right? So there is also a fair value gap inside of this order block. Remember I said you want to see the 3 candle pattern. It's right here. Right? And then that's the low right here. That's the engulfing candle right here. Then that's the low or the high of this candle that never meets, right? This is a sign that, hey, if this tells you 2 things, right? This tells you that if this is bullish, I take that back. This tells you if it's bearish, if price was to make this low down here and we came back inside of this range right here, if we still bearish, it should sell off. And that's why you got these wicks right here, because that's what they tried to do. They tried to sell off, right? Price was not able to sell off any further. And not only was it not able to sell off, but now it's buying over here. This is a shift in direction. So now the way you want to approach this is once you got your fair value gap, right? There are 3 levels in your fair value gap, right? And this little measuring tool is what you want to use to get that.
And while you're doing this, are you always in the 15-minute view?
Nah. This
So you
I'm
can
just
look for this same pattern, like on a 4-hour.
you can use this on the 1 second chart, all the way to the daily, the monthly, the yearly chart. This repeats itself on
Okay.
every time frame. So the fair value gap, once you spot it, there's 3 main levels you got to look at: the high, the middle, and the low. And at the high, middle, and low, you're gonna see if everything is in line, like I just went over, you're gonna see that price responds to one of those levels, right? And you can see, like, once we pushed up and we made this high and we retrace all the way back down to this fair value gap. And the reason why I came back to this fair value gap in particular is because this is where the moves start. And then you also notice that this fair value gap that they were supposed to use, right? It might not be on this time frame, right? Might get a better look on a different time frame. But you'll notice that they overlap because this probably on the 30-minute. Yeah, the 30-minute look better. This same order block right here has a fair value gap in it on the 30-minute. These two overlap. And when you got the overlap, right? This one over here, the one that I just drew, this was supposed to actually sell the market. And it didn't. And when you get that, there's going to be an overlap between the one that it just created and the one inside of the order block, which is this one right here, this orange one. The orange one is inside of the order block. That's an important one because we just took the money that they had below these lows. We took all the money right here. And now that we taking the money, we can go in a different direction. We can go in the true direction. Because what this really is, it's a fake out. This is a fake out. They fake people out, right? And the psychological part of this is the market makers. The market makers are the people driving the price up and down, right? They need us as retail traders as to add money into the market, right? So in order for them to put in their orders, right, they can't just put in 8 trillion orders at one time, right? They have to break those up because if they try to put 8 million orders in at one time, who gonna buy it from them or who gonna sell it to them? They have to piece it in, right? They have to piece all their orders in, right? So they have to trick people into thinking that the market is gonna go in a certain direction. So that way that they can reverse the market from there, right? So at this point, psychologically, what's happening is they are telling people that, hey, we about to sell the market. So they're going to shoot the market down like this. And then there's going to be a bunch of people that go in on this engulfing candle to say, oh, yeah, damn, they about to sell. I'm about to sell too. But in reality, they wanted you to sell that so they can buy your order right here. That's what this engulfing candle represent. That's representing them buying the orders that you sold over here up. That's why this overlap is important, because essentially it's just from a psychological standpoint, I just tricked all y'all into selling the market. And when y'all sold from this high of this candle, 68.41, I started buying down here at 68.14. And I kept buying. And then every time you came in back into this area, you thought it was gonna sell again. And then now I can put in my bigger orders and I can keep adding and adding because I don't need you no more. You just start buying and adding orders because now everybody else is buying along with me because they see that the market is pushing back up to go in a different direction. That makes sense?
Yeah,
Yeah.
it's definitely coming together for me.
Mm-hmm.
Yeah.
Okay.
Liquidity
So
rate.
it's a liquidity. Exactly. That is exactly. A raid on liquidity. They take all the money out of one direction so they can flip the market into a different direction. That's exactly what it is, a liquidity raid. They raid in they empty in the money. They empty in the bank down here at 68.14 so they can get some more money. That's it. And so once you get the fair value gap, you waiting for the price to come back into that area, and you're going to take your trade from there. You putting your entry somewhere between the middle and the high. In this particular case, the top of the fair value gap or the middle of the fair value gap, and then your stop loss is going to be below the candle that made the gap or the low itself. One of those two. And then you're going to target, your target going to be the last high that was made, which is in this case up here. Normally you ain't going that high, but that's the main target right there. And then after that, if you take this out, then you start looking for where's the last liquidity above this high, right? These highs right here. That's the last high. These highs, there's a high right here. There's a high right here. There's a high, there's not a high, but there's a gap right here. So if you don't have any liquidity, then you're looking for where's the last gap or where's the last order block in the opposite direction. Where's the last order block? Where's the last fair value gap? Where's the last this, that, or whatever it is that's above it that you can trade and take profit at? Because that's what you're going to look for next. Because that's all it's doing, right? And in this case, instead of it being an order block or a fair value gap, we ended up targeting in this move from this low, we target the weekly opening price, which is a very important level because this tells you how good or bad we doing for the week. You got me?
Yeah, I'm following.
Yep.
Yep.
So, and like, hold on. Give some water. So the main things, and I think I got a not a PDF, but I can give you all this screenshot, what I always give to people for my notes. Hold on. I think it was May. All my study stuff on this chart. I think I gave y'all this before, but the exact pattern that I always look for is this in particular. So this is if I'm looking for a sale though, right? Um, I think I sent you this before, cars, but
Yeah, you did, but send it again. It's all good.
yeah, yeah. So this repeats itself over and over again, right? And let me screenshot it. Where I want to, I need this to be somewhere I can get it all the time. Come on, man. I'll just screenshot it later. It's acting crazy. But like I told you, I want to see some kind of consolidation or some lows that's just sitting around, right? This could be equal lows, this could be a single low, or anything like that of that nature, right? It could be on the low, it could be on a higher, it should be on a higher time frame, like the 1 hour, the 4 hour, 30 minute and above, right? Like essentially like the 30 minute and above, right? You want to look for these equal lows or a swing low, which is a single low that's just sitting by itself. You want to see it like this, right? And you want to see it like some highs being made over here, whatever the case. It ain't got to be nothing special. But then you want to see that order block sweep through that, right? The order block that sweeps through it needs to take out these lows, and we need to make a new low, right? When we make the new low, right? This new low should be responding to something that's over here on the left somewhere, i.e., another fair value gap from weeks or months ago, or another fair value gap or order block or something like that from a higher time frame from another time, something like that. It should be responding to that, right? And inside of this, we should have a fair value gap to the downside that does not get used to push this low and take this low out. So once we come back up, once we make this low and we come back into the fair value gap inside of the order block, again, the order block is a single candle or a series of candles to the downside that sweeps a low. And when we come in here, instead of this high that's getting made right here or right here, instead of these highs taking out this low, it trades inside of the gap, the fair value gap that was supposed to sell us off. And then it keep pushing up. Once you see us outside of the fair value gap, like this little blue arrow right here, and above this order block, we should see a new fair value gap get created. That's a fair value gap. This would be the equivalent of us getting a 0 to 1 move right here, right? Our 0 to 1 move, right, would be the start of the move to the upside. So our 0 to 1 down here to here, we get a 1-2 retracement, and then our 2-3 should push us up higher. That's what I mean when I'm talking about that 0 to 1, the 0 to 1, 2, 3, 1, 2, all that stuff. it's like the 0 to 1 is where the moves start. The 1 to 2 should be a retracement. The 2, 3 should be a continuation. That's what I'm referring to when I'm talking about that stuff. 0 to 1, 1, 2, and all that other stuff, right? So the low that we made right here, we know that we in a shift in direction, because once we started getting above this fair value gap down here, that got inverted, and we get above the order block, which is up here, over here, and we make a new high, that's pretty much telling us that if we in a bullish market, that when we get this retracement, that should be our sign for us to keep going and price to continue higher, right? And then in particular, we should get an overlap between the new fair value gap and the fair value gap that we inverted down here. And that's the main areas you want to look for, right? So in this particular case, normally I would be, depending on this, normally I would be looking at what is between the high and the middle, but we got an overlap in this case between the middle and the low. So my trade would be coming down somewhere between here. My stop loss would be below the candle that made the low, the fair value gap, which would have been a candle that would have been in between this low and this high. So my stop loss would be either here, or we're going to put it all the way down below the low. Then once we get in the trade somewhere inside of this little green box, the first target we're going to look for is this high right here. Once we get this target, above this target, there should be some like liquidity. There should be an order block in the opposite direction. There should be a fair value gap or something that we come into to target up higher. Repeating this over. The same thing if I'm selling the market. If I'm selling the market, it's the opposite. I should see highs, equal highs, a swing high, a single high. And then I should see a series of up candles or a single up candle. That's going to be the order block, a bearish order block. That's a bearish order block, right? And inside of that order block, I should see a bullish fair value gap, right? Then I should see price make a high, right? And when price make this high, I should see price return into the fair value gap that's supposed to be taking us higher, right? And if it takes us higher, if it doesn't take us higher, it should fail, right? And inside of this move that we trade back into this, there should be a fair value gap, a new fair value gap created. Just like we had a bullish one, we have a bearish one that got created. And then there should be overlap between the one that was supposed to buy us, which is now inverted. Once we trade below it right here and here, we come all the way back up into the new fair value gap right here. There's overlap inside of this shaded red area. And then this is where we would look to sell. We would either be selling above, we would sell in this red area, and then our stop loss would be above the candle that created the fair value gap to the downside or the high. And then we target the low that was made here. And then there should be another area of liquidity below this area, or fair value gap, or order block, or something else. Got it?
So is it safe to say that we're just trading from one block to another, or value gap, or we're just hunting for liquidity or the next block or gap?
You said all the right stuff in different orders.
Of course I did. Okay.
Yeah,
But I
Okay,
got the concept.
yeah.
Okay.
let me ask a question right quick, Corey. So,
Mhm.
starting from the beginning, over here on the left where you got the X at, drawn with the line on top up under it.
Mhm.
So we can assume that this is like an accumulation phase, right?
Exactly.
And
Exactly.
then that one peak at the bottom right there, that's a bearish order block.
Which one?
That first that peak where it say order block pierce plus the fair value gap inverted. That
Yes.
one peak over there to the left, not the block. Go down to the bottom. That no, go back over to the right. Right there. That would be our bearish order block, right?
This whole thing, this whole green move right here.
The whole green move is a bearish order block.
Yeah.
Okay, so at the top of that peak, that's going to be the single up counter that you're looking for, right?
Single up candle or series of up candles?
Single or series. That's
Yep.
what we're mainly looking for, that pattern.
Yep.
Okay, so that'll be more like it's the starting of that'll be the start of a distribution phase then, right?
Exactly.
Okay.
Exactly.
Now it's all come together.
That's the start of the move down. Basically.
Yeah. Okay.
That's
So
the start. When you start seeing this is your sign that this probably about to fail.
okay.
What that look like, let me show you this. Now that you see what I'm looking for, let me show you what it looked like on the actual chart. We're going to see
Okay.
the same exact thing on the actual chart. I'm going to start with the bearish example because I'm looking at one right now in front of me on ES.
Okay.
So, all right. So ES. What did I tell you? We need to see highs, right?
Mm-hmm.
There's some highs, there's some lows right here, right? Then what you need to see a single candle or a series of candles. That's what this represents right here. And inside of that, you need to see a fair value gap, right?
Okay.
This is the low. This is the high of the fair value gap. And if we are still bullish, right? When we come back into this, this should be buying. That's what should have happened right here. We supposed to be pushing up higher to make a new high right here. We did not do that, right? Right?
Right.
Okay. So now, once we trade through this, our first sign that we trade through it is right here. We traded through it right here, right?
We took the low out on that fair value gap, right?
Yep, we took the low of the fair value gap out right here. And then this is the lower low that was made, right? Now, after we make this lower low, or we just sweep it right here, because it could happen at one of these two times. We looking for a fair value gap to the downside in between this high and this area or this area right here. And if we look at a different time frame, there's a fair value gap in between this area that set up our sell-off right around here. And even if we didn't catch it, there's some smaller time frames where you'll see the fair value gap to the downside that's right here. And then if you don't catch it up here, which I don't want to change the time frame. If you don't catch it over here, you also got the same thing right here. And then the fair value gap is right here. That's the one to the downside right here.
Yeah.
And that's the high, that's the low right here, right? And just like I said, you enter inside of here, or worst case scenario, you put your entry somewhere along inside of here. Your stop loss is above this high right here, or it's above this high. And then your first target on this is here. You would have hit that. If you stayed in this trade, the next target would have been below here. You would have hit that. If you stayed in this trade, the next target would have been below here. You would have hit that. And then if we go out even further and look at the other targets, right? Let me not clear it. We look out even further and there's other targets, right?
Yep.
You would have caught this one.
Yep.
You look out even further, guess what else? There's another low right here. you would have caught that one. There's another low right here, you would have caught that one. And then by that time, you've already made 8-1 at that point. You know what I'm saying?
Mm-hmm.
Even up here at the top, right? Even up here at the top, let me clear all the drawings right quick. Even up here at the top, if we just looking at where we first got in, right? Up here at the fair value gap, right?
Mm-hmm.
Our first target on this trade should be this low right here, right? And if we look at a setup on this low, right? I'm gonna use our sell tool, right? And let's say we use the high of the fair value gap, and we use the counter that made the fair value gap, right? And we just look at the target that we looking at, right? The first target. The setup on this trade is almost 4-1. Right?
Hold on. Blowing up my screen. Oh, I see it. Okay.
It's almost 4-1. It's a
3.7.
Right? So if I lost this trade, right? If I won this trade, I'm looking at gaining 4-1 almost, right? If I were to take it all the way down here, I'm looking at a 10-1 setup. You see what I'm saying?
Oh yeah.
And if I did the high right here, and I'm just looking at the first target, I'm still looking at almost 2-1. And every setup that you take, you want to try to find a 2-1 at the best. Everything need to be 2-1. Because you want to give yourself the best opportunity you want to give yourself more chances to lose than you need to win.
Okay.
You managing how to lose, not how to gain. Because if you always looking at setups like this, you always gonna have 2-1 and above.
So you want to mitigate your losses. Basically, you
Mitigate
want to
your
minimize
losses.
your losses.
Minimize your losses.
Okay.
And you want to
cool.
stack up enough wins to handle any losses you can take.
All right.
Just like, and in the opposite direction, right? If I'm looking for a buy, the same thing in the opposite direction, right? Remember I said it need to be a low taken out, right? This is a buy now, right? A low is taken out right here. A low is taken out right here. This candle is the order block, right? This is a single candle, right? And inside of this candle, there's the fair value gap right here, right?
So that single candle with the long wick at the top, that's the order block, right?
This is the order block that I got circled.
Okay.
This red candle, it's a single candle right here.
Mm-hmm.
Now, on the higher time frame, this is one too.
Yeah.
It just looks like right now it's multiple fair value gaps inside of here. That's how you know it's a higher time frame order block. If you see a series like this, that means that yes, it's an order block. Yes, it got a fair value gap in it, but you probably can look at the higher time frame to get a better view of what this looks like.
Okay. But the key factor to this is it's shoot straight through. It ain't
the liquidity. The fact that we took liquidity here and here, and then we got this down candle right here that has a fair value gap inside of it. Then we have another one, a bullish fair value gap right here that it trades through that one that's right here. Trades through the order block.
So it inverted it.
Now we can start looking for the buy. And you know, okay, we should be pushing down near or at this order block. What happened right here is exactly what you want to see. And now you know, hey, let me put my setup. Let me get my setup. If I'm looking for a buy on this, I at least know I'm coming down to visit the order block in this case. I want to see it come down to the fair value gap. They got inverted. But if it don't, I'm all right. Then you put your stop loss right here below the candle that made the bullish fair value gap right here, or the low that got made. Then what you're doing is you targeting the high that it made, which is right here. That's almost 2.5 to 1. If I use this low, that's 3 to 1. If we stay in this trade and I say, all right, cool, I'm gonna at least just go to the weekly, right? That's almost 5 to 1. So if I lose one of those, but I win one of these, I'm straight. Don't matter if I lose one, because I'm making 5 to 1 out of this. You know what I mean?
Oh yeah.
I'm making 3 to 1. I'm making 2 to 1. So I'm good on it, you know?
So when we wake up in the mornings and we're about to start trading or whatever, we need to mark up the value gaps from the day before, look at the order blocks, and then the previous day high and lows.
You said the right thing in the wrong order.
Highs and lows, and then the value gaps, order blocks, or what did you call them? PD arrays?
Yep.
And then the
Find your PD arrays. Find your PD arrays. Your PD arrays are your fair value gaps, order blocks, liquidity, equal lows, swing highs. Those are all PD arrays, right? So in order, where are you your previous day high and low? And where are you in reference to the previous day high and low? And you could be saying the same thing. Where are you in reference to the previous week high and low? Where are you in reference to the previous month high and low? And if you are close to any one of those, you should likely expect for that to get taken out, if based off of the direction you're in, right? If I'm bullish, I should be looking for previous highs to get taken out. If I'm bearish, I should be looking for previous lows to get taken out. If I'm sideways, that means that previous highs and previous lows are not getting taken out and the market just sideways, right? Or a previous high might get taken out, then a previous low might get taken out. Or on another day, a high and a low might get taken out. So those are signs that you're in an indecisive market when you don't see those things happening. And that'll look like something like what's been going on lately, right? Because we've been indecisive lately, right? If we look at it daily, we take all the drawings off, right? Up until this week, right, which is this yellow, that's when this week opened up. We had just been going up and down, up and down, up and down. A bullish day, a bullish day with a long wick, bearish, bearish, bullish, bearish. So no direction, right? Because even though we had a bullish day here, the next day we took out the high, then the next day we took out the high, but then when we took out the high, we closed inside of the previous day. Then the next day we didn't take out a high and we took out a low. And then when we took out another low, and then we took out another low, we took out another low, but we didn't take out any more. And then we closed back inside of the range, right? Then the next day we took out the high, but we didn't take out the low. And then we closed inside of the previous day. Then the next day, we didn't take out a high, we didn't take out a low, and then we closed inside of the previous day. Then we open up, we took out a low, a low, a low, another low, another low, but then we stopped at this order block right here. And then if we look at the next time frame lower, you can see that there's an order block. There's a fair value gap. There's a small fair value gap inside of here. We get price to hold up right here. And it stopped. And now we potentially on a reversal to the upside to go after these highs over here. This cycle repeats itself on all time frames, right? It's the same thing that happened over here. We swept lows. We had an order block. The order block has a fair value gap in there. There's a small fair value gap right here. There's another fair value gap right here. There's another one right here. If we go to a different time frame, all of this move will be smoothed out. This will be another fair value gap right here. And then all of that all that did was come back down into this and repeat the same thing until it took out another high. This stuff gets repeated over and over. It just happens on different time frames, fractal. Whatever happened, whatever I'm telling you now, gonna happen on the 1 second, with the 15 second, the 1 minute chart, the daily chart, the monthly chart. It's just gonna look a little different. That's all. And once you can see it, you know what to do with it. Cool?
Cool.
Cool.
I'm gonna screenshot these ones I was trying to get, and I'll send them to y'all. Let me see what's going on. Let me just do a whole screen.
And I have to drop, but I'll be joining on Sunday.
I'm dropping too. My mouth's so dry.
Sounded like you was
My
finna
mouth so
keep
dry.
You're gonna have to
dropping
put like a
too,
gallon pitcher next to you, Corey,
Right?
because you
I
always
got
be
one.
done.
I got one. I'm finished the gallon.
Oh wow.
Corey,
Yeah.
did you start recording this part of the session? Or this
Nope.
part, or you just left it, you just stopped recording altogether?
I start recording this.
Okay, cool.
Yeah, I'll send. I just screenshot it. Hold on. Cause boy, my mouth's so dry. The back of my throat feel like an ashtray.
Oh wow.
Dropping gems.
Yeah.
My throat feel like an ashtray.
So on the weekly outlooks, I'm gonna be logging in late because I don't get out of class till 7:45. But
I recorded.
cool. The Sunday sessions, my shift done changed, so I jump in, but I'm gonna jump in and out till y'all get done.
I recorded.
I'm trying to be like you and Kelly when I grow up.
I mean, like Corey, I need to go spend a month in Asia.
Hey,
Man, what you talking about, man? I'm talking about.
Okay.
I might be gone for real, man. I got laid off yesterday, man.
No,
So
you didn't.
yeah, man, I might be gone. I'm debating whether I'm gonna go back to Thailand though, for real.
How long you gonna be over there this time?
Huh?
How long you gonna be over there this time?
Well, I'm gonna be gone at least a year if I go this time.
Dang.
Yeah,
You still gonna be trading?
That's all I'm gonna do. I'm just gonna trade full time.
I'm not mad at that.
I need that lifestyle. I need that ASAP.
Because
Yep.
I got my VA up to, a good number. My VA benefits up, so I get money every month. And I don't have no bills other than the mortgage and over here and an apartment over there with what I'm about to get from my severance and my bonus. I still get my bonus. I can live off of that for 4 years in Thailand. so
Oh yeah, you doing good, boy.
so I'm just when they told me the news, I almost laughed at them.
Because it was already some BS, wasn't it?
Yeah, I already I told you I think they I, I built out their customer service app for them and I migrated all their data and they pretty much let me go after that. So
Oh no.
yeah,
And
yeah,
so they call themselves trying to use you, trying to
Huge.
play.
pretty much. But I
Okay.
wasn't the only one though, so I ain't even gonna like take it personal. They just laid off. Macy's probably laid off like 1,000 people just to this week. So it's all good. I it is what it is. My bills paid. I ain't got no major purchases coming up. I got enough money put away and I got enough money coming in. So it's gonna be tight a little bit, but ain't no meals gonna get missed.
I know that's
That's
right.
what's up, man.
Trying to be
That's
like
what's
you
up.
when I grow up, man. For real.
I'm telling you, man.
And then once I haven't been in no rhythm to trade like I want to, right? Because it'd be sporadic. Like I told you, I've been working on that project. So I would go 1 week, 1 day a week I can only trade, or I'll go 2 weeks and I can only trade like 1 day because I'll be doing calls and reviewing code, writing code. I'm using the same brain, right, to try to write all this code. And
Yeah.
once I'm in my rhythm, I'm trading every day.
Mm-hmm.
So I ain't even really tripping. And I had a 9 o'clock call every single day.
Yeah.
So at the best time to trade, I'm sitting up here on the call and
Talking
I'm
about something you don't
proceeding.
care about.
It was eating through a lot of your time anyway.
Yeah, yeah. So they might have been holding me back from these $54,000 days.
Listen.
Folks, they want to keep us drones, man. They don't want us to be financially free, man.
That's what I've been trying to tell y'all, man. And I've traded full time before, so I know how to do it. It's just been a while. Elaine, no, that's how you met me when I was full time trading.
Yep.
So, and that was not with all this capital.
Oh, that was with your own capital?
My own capital.
Yeah, that was
And
before the
FTMO.
funding.
Yeah,
Yeah.
I had FTMO though. I was getting payouts with FTMO and this other one called Funded Pips. But they got shut down and they didn't give me my payout, my last payout.
Oh, that's not cool.
They probably didn't have it.
No, they didn't. They didn't. They didn't.
Yeah.
But
So they
yeah,
probably opened up under a different name so they have to pay out everybody out.
but that lady don't even exist on social media no more. So
Wow.
yeah, she don't even have you can't even find nothing about her no more.
Wow. Who was it?
I
She
don't
didn't get
even
dropped out of
remember
plane
her
or nothing.
name. I don't know. I don't even
Probably hit
remember
the
her name.
jackpot. She probably hit the
No,
jackpot.
man,
It was like,
shit,
bye.
No, she probably got locked up.
probably got
That's
locked up or
probably what
either
happened.
got sent to Siberia somewhere.
Oh no, not
Yeah.
Siberia.
But like my little cousins, Kelly, I out of all the people, I think you about to go in with this shot.
I don't
Like
have no choice but to, man.
I think my little cousin about to go in, bro.
Yeah.
My big cousin, he be playing around the lane. Kyrus done been on this session for at least 4. You've been on my session at least 20 times now, bro. You
Yeah,
asking
man.
me
But you know,
the same question, bro.
I'm older than y'all, man. So I'm not, I can't catch on that quick, man. I gotta, that's
You were
all.
doing good in this class.
Yeah, that's because I've been doing. Like you said, I've been in this session 20 times already.
How old
I'm
are you,
in no
Elaine?
room to pass judgment on nobody. I've been here forever, and I'm still over here going through it.
How old are you, Elaine?
I am 47.
Okay, y'all, you and Kyrus the same.
Yeah, about the same. I'll be 49 next month.
Man,
Yeah.
you talking like you old? We ain't old. Don't do that.
I said, my mind older. It don't work like it used to. I ain't as sharp as I used to be. I gotta think about some stuff for a minute.
Same here.
It's all good. You know.
Yup.
All right, my little cousin about to go in on y'all, bro.
Oh yeah, Kelly Fresh, she sharp with it.
Boy, yeah, I'm trying to tell you, boy. I can't wait, bro.
Give me a couple months of some profitable
But
paper.
soon as I saw you on there, I was like, she good now. Oh yeah, she about to go, boy.
On in.
Boy, Kelly gonna hear these numbers come in. Oh, Kelly gonna go. Kelly gonna go, boy.
Overly.
I did that on purpose. I talked about the numbers on purpose because I needed you to hear what I needed to tell you, bro.
Yeah, I need that ASAP.
You need that part. So you can see.
Sheesh, I need this like now.
Yeah,
Kelly was
especially
like,
tech industry just in general. Like anybody can get laid off at any time.
right.
Like I'm not trying to work for somebody for the rest of my life.
Man, this is my second time, cause it's my second time getting laid off. Then the whole stuff that happened when I was contracting overseas, that it's demoralizing, man.
Yeah.
And the more times it happened to you, the more times you realize that you can't live like this no more.
I'm trying to tell you, man, that 40-day furlough that we was under, nah, man.
You can't.
That's shit for the birds, man.
You can't, man. And then we black. We can't stay in this system.
Nah.
They telling us right now that they don't want us in their system right now. They telling us.
I'm talking about live and on TV.
Live and on TV. This man just said in the World Financial Forum that he didn't realize that they, speaking about Somalian people, which are black people, that they weren't not as smart as he thought they were.
What?
In the front of all of the world said this. And he said that we can tell because their main means of making money is becoming pirates. That's what dude just said, bro. In front of everybody. And you comfortable with saying that?
Yep.
Very.
So they don't want us in their system.
And guess what? I don't want to be in their system.
We don't need to be.
I don't want to be in their system.
We don't need to be, bro. Like, it's over with, man. It's over with.
Yeah. Let me keep learning this language. Yeah.
Yep.
I'm ready.
We need to be trying to learn as much as we can to get money and get out of here. And if you can't get out of here, make sure you making money outside of what they do.
Yep.
Don't use their job. Don't do none of that stuff. It need to be even trading. Like it's good. It's a means to make money, but even after that, you gotta find another way after that to make some more money. So we can't think like we used to no more.
No, not at all, man. Even talking about these jobs that's supposed to be professional jobs ain't gonna be professional jobs no more.
Not even.
You know, he want everybody to be. He want to bring it back to the old way of living. He want to have lords that's governing certain parts of the country. with they
Mhm.
indentured servitude,
Yeah.
slavery, man. In my
He
opinion,
said,
that's me. That we're trying to get back to.
You're not alone. Hmm.
You
yeah.
know, so now we
Yeah.
gotta do the chuck wagon thing, posse up to go to the store, man, just in case we got to kidnap one of
Yeah. Hmm. Yep. You do.
all that, man.
You do. But yeah, man.
Thailand, here we come. Shoot.
Right.
That's what I'm trying to tell you.
Right.
I
Well,
was mad they ain't tell me while I was gone, man, because I was just over there. I could have stayed over there. I had almost I actually while I was gone, I looked at an apartment too. And I was
in
about
Thailand,
I
yeah.
was about to have Crystal because Crystal stayed longer than me. And I had to fly back because I had to work. So I actually came back on the weekend of the 10th, but I went to Japan for a couple days, and then I went to LA for a couple days, and I worked a couple days in LA, and I came back on Wednesday, last Wednesday. And that's when, and then when we had the little holiday, then they told me on Tuesday about this, and I was just like, y'all, I told these people that I went and looked at the apartment with that I was gonna put the down payment when I got home. But while I was in the air, somebody else came and got the apartment. So I didn't get to get that apartment, but I was literally gonna land and pay the deposit. And then I was gonna tell Crystal to just stay on over here. And then let me find out some stuff about my job. And then I was just gonna just go on and go back over there. But they
So listen,
Now when you go back, it's gonna be a better one.
oh
yeah,
yeah,
yeah. Well, I
yeah.
was gonna say, what you probably need to do a session about, what to look for in Thailand. You know what I'm saying? Just to give us a rundown about what Thailand all about.
But
Because I had been looking at Thailand for like the last 2 or 3 years. I was looking at Thailand, I was looking at Singapore, and I was looking at I was looking at Cap Haitian, but I don't think I want to go over there.
who?
That's over there in Haiti.
Nah, Katie ain't it right now.
No, that ain't it.
It's
So
not that it ain't it, but it's just
it's too much going on over
to,
there.
to do what we trying to
And
do.
that's
We
sad
need
because Haiti is
stable.
beautiful.
It is. It is. You got to have stable internet, stable electricity.
Yeah,
Honestly, my top four places are Thailand, Costa Rica, Brazil, South Africa, and Vietnam. And
Vietnam.
It's definitely been on my radar.
and
Why
Vietnam.
why Vietnam?
the, the reason why I say that, you know what? I think I am still recording. Hold on. I am. I've been recording all this
Oh
time.
wow.
I need this
So
recording.
all this is recorded. I thought I stopped recording.
So just edit out the part that you didn't want to put
Well,
on
I
there.
ain't about to do all that. It's in there now. It's in there now. But the and kind of in order, uh the reason why I like the top two places are Thailand and Vietnam is because of the cost of living.
Okay.
Mm.
And you can literally probably live off a family can live, and I'm talking about a family with kids that are elementary or all the way up to high school age off of like $2,000 a month. That's food, clothing, transportation, housing, everything. Like, and I'm not just talking about like barely making it. I'm talking about with a higher standard, a higher quality. And that's why I like Thailand and Vietnam, because not only is it cheap, but the quality is like 12 times higher than what you're getting over here.
What you mean by the quality of life? What you mean by that?
I mean, like a lot of their structures are a lot newer, right? A lot of their buildings, a lot of their apartments are brand new. Like, so if I go and rent an apartment over here, I might have to rent something that's 20 different families that lived in, or you know, uh I ain't got no your apartment ain't got no doorman, you ain't got no pool, you ain't got no gym, you don't have nothing around your apartments you can go and walk to, right? But
Mm,
you got all that over there, right? And
mm,
then like what you spending over here, you spending probably a fourth of what you would spend over there for the same thing for better quality, right? Like you eat better, you outside more, right? You have like for me to go out and take Chris out on a date, right? Just thinking about that, right? Or take the family out to eat over here at a nice restaurant, right? And I ain't talking about like no Chili's or nothing like that. At a decent restaurant, right? You would spend over here probably like $300, right?
mm,
You, Salida, and the kids, $300 easily, right? At a
mm.
at a just a medium style restaurant, right? You could take that same thing and probably spend $90 for the same thing. If it's just you and Salida, you ain't spending no more than $30 for y'all to go out. I ate appetizer, entree, dessert, and I had drinks. That's
Wow.
the same thing, right? Go to the movies, right? I want to go to the movies. I want to see a Marvel movie. I want to see it in 4D. I'm spending $7 on that, bro. $14 at the most, right? And I'm sitting in my chair and I'm getting rained on in that mud. And my chair moving up and down. And it's
God.
snow falling in the movie theater for $7 to $14, bro. Like, you know what I mean? Or um, what else? I want to go get in an Uber, right? I'm spending on average, my average Uber ride was $1.37, bro. Like, and I ain't talking about just going
Wow.
in and out the car. I'm talking about I'm in the car for 30, 40 minutes. I done rode all this far on $5 and I'm all the way on another side of town or something like that. Or I'm doing a dinner cruise across the river for $20, $35, and I'm all I can eat buffet, got a performer, or I'm getting a full body massage for $12. I'm getting a massage every day, bro. Every single day.
Okay. All right. That's
That's
it.
not including how cheap it is to travel other places once you over there.
That's the other part. I'm
$40
going, I'm going to other places around the area. I'm getting on a plane for $30 round
to go
trip.
to Singapore or Bali.
For round trip. You can go to Maldives for $400 from over there.
Are you kidding me?
No lie, no cap.
That's a
I
three
can go.
thousand dollar trip, man.
I can
Per
go to
person
Bali
from
from
over
there.
here.
I can go to Bali from there for $200. I can go to Japan for $300. I can go to Korea for $300. I can go to Vietnam, Cambodia, Myanmar for $40 around. Like that's the kind of lifestyle you leading, right? So it's like, why would I not be in a situation like that? And then everything I'm telling you about Thailand, you divide that in half because Vietnam is cheaper than Thailand. So um, it's like now you spending what you was spending a third, you spending a fourth over there, like the same type of experience. And then the other thing is you can live whatever the quality of life that you choose to live over there. If you want to be real cheap and be real low key, you can do that. If you want to be medium reserve, frugal, you can do that. If you want to be high end, you can do that, but you still not paying high end prices. You still never pay that unless you want to. It's not because you got to, right? That's the main thing I like about it over there. You got the same situation in Brazil. You got the same situation in South Africa, same situation in Costa Rica, same situation in Colombia, because these are places I done live, right? But the price does go up, right? The quality is high, the price does go up though in those other places. Because like Costa Rica is cheaper than being over here, but it's not cheaper than Thailand. In South Africa is cheaper than here, but it's not cheaper than Thailand, Vietnam, all those. Just like Brazil, cheaper, but not as cheap as those other two.
You can still get those experiences if you
Exactly. And then it's like the food is the people. The food tastes like you ain't never had food before. Like some of the stuff tastes like it's the first time you ever had this before. And then it's tasting different food that you wouldn't normally be eating, you know? And it's just like, it's an experience, not just I'm having a meal, right? Then the people who service you, like Thai people.
Hey, what's up, man?
And Philippine people, they some of the most high quality service people in the world, right? They treat you better than any and everybody you will ever like come across. Even if they just like doing the simplest tasks, like it feels as though like you getting personalized service, you know. And you doing this, you treating me like I'm a millionaire when all I'm doing is getting a foot rub. And I just walked in off the side of the street, you know.
Man.
All right, bye, y'all.
All right, I'm about to go
Have a good night. Yeah, I gotta go too. God, man, this was good.
I recorded all this. The good stuff at the end and the regular stuff is all the way up.
Okay, y'all be easy.
Sunday at the same time?
7:30.
All right.
All right, cool.
All right, have a good night, y'all.
Later.
All right, y'all.
All right.